All right. Bismillahirrahmanirrahim. Assalamu alaikum, everyone. My name is Yasir Yameen, and I welcome you all in this SBR session. Guys, in today's session, we'll be doing one mock exam which was provided by ACCA for June 2024 attempt. Now, this is question number 4 of that mock examination. I feel that this kind of a question is a question which you can expect as a question while you go for your real exam. And one of my students also told me that for June 2024 attempt, a part of this question also came into the real attempt. So it's pretty much relevant for your examination. All right. So we are doing question number 4, and this question number 4 will teach you a lot of things with regards to your exam. So it's very important that you listen to me very carefully. We'll start with the question now. Examiner says Anchali Company. So the company's name is Anchali. Anchali Company prepares financial statements in accordance with IFRS accounting standards. The financial year end is 31st of December 20x8. Now, I have always told people that whenever you find accounting year ends within the question, you should make sure to highlight it. It's very important to highlight the accounting year end because for an accountant, dates are very important. And let me just, emphasize the importance of dates in this particular question. I'll just write down the year-end date in front of you guys. It is 31st of December 20x8, which is the year-end. And this is the date while you prepare your financial statements. All right. It says the following exhibits available on the left-hand side of the screen. Obviously, I've copy-pasted this question into a Word. But otherwise, when you see this in the CBE practice platform, the exhibits would be on the left side of your screen. So it goes on like that. The following exhibits provide information relevant to the question. Now, you will be provided with 2 exhibits with regards to this question. The first exhibit is about restructuring. The second exhibit is about benefits. The first exhibit, which is about restructuring, it says that this exhibit will describe the restructuring plan of Anchali Company and its potential impact on investors. So you see, the exhibit number 1 will be about restructuring. Now, as far as the word restructuring is concerned, can you guys tell me that what accounting standard would come into your mind while you see the word restructuring? Which accounting standard would you be exposed to? Think as if you're doing such a kind of question in your examination. What will come into your minds while you see restructuring? And rightly said, while you see restructuring, IS 37 would come into your mind, right? And what did IS 37 say about restructuring? You see, restructuring is an activity which is planned and controlled by the entity. And in a restructuring activity, the scope or the manner in which being business is conducted materially changes. So restructuring basically involves structuring your organization, redesigning or reorganizing your organization in a way that either your operations or locations or scope is materially being changed. And according to IS 37, a restructuring may call for some costs. Various type of costs are involved during a restructuring process. For example, a company might say that as a part of restructuring, we'll be firing some people. Or as a part of restructuring, we'll be moving our head office from an expensive location to a cheaper location. Or we will be closing down a loss-making division, right? So if, for example, if you're closing down a particular property, if you're changing your, head office locations, let's say, then there will be lease cancellation charges. If you are restructuring, and as a part of that restructuring, you are firing people, you are bringing on redundancies, which is often the case in the case of restructuring, then there will be termination benefits payable. Or for example, there will be some penalties, or there will be some, for example, consultant charges, or for example, some lawyer fee, and so on and so forth. So all of these expenses become part of restructuring. Do you guys remember that when, according to IS 37, a restructuring provision could be recognized? Do you guys remember how many conditions were there in IS 37? after which restructuring provision could be recognized. Now, this was a specific head under IS 37. Now, somebody just said, sir, 3. No, the answer is wrong. How many conditions were there after which a restructuring provision could be recognized? How many? Very good, Basam. 2. There were 2 conditions according to IS 37 after which a restructuring provision could be recognized. A restructuring provision can only be recognized when there is a detailed formal approved plan. So a restructuring is a major economic activity that is happening within the entity. And therefore, IS 37 requires that a provision should only be made when there is a sufficient detailed plan behind that activity, so that it gives us confidence that a future probable cost is going to be incurred, and therefore a potential liability for that cost can be recognized. So the first condition is there must be a detailed formal plan. And the second condition is that that plan has been communicated to those who are to be affected by that plan. So the communication of the plan has been done such that it creates a constructive obligation upon the entity. That is, it creates valid expectation in front of others that there will be a certain cost about to be incurred. Make sense? So there are 2 conditions under IS 37 after which a restructuring provision could be recognized. Furthermore, I would like you to recall one more thing. You cannot recognize a restructuring provision. You see, a restructuring provision would involve making an accounting entry of P&L debit and a provision. A provision is an estimated liability, right? A provision is a liability of uncertain timings or amount. So it's it's a potential liability. So IS 37 says that whenever you are preparing this accounting entry, P&L debit and provision credit, you can only include those type of costs under your provision which are directly attributable to the restructuring activity. For example, any cost which is an ongoing cost, which is an ongoing business activity cost, can never be made part of restructuring provision. We have often heard that, costs like relocation, retraining, these type of costs can never become part of restructuring provision. And these have been, specifically prohibited under IS 37. All right. So we had a good overview, or we had a good recap of what IS 37 actually said. And I sincerely hope that it was easier for you to recall about IS 37. Make sense? Then there will be a second exhibit, which will be about benefits. Can anybody refer which accounting standard comes into your mind whenever you see benefits? And not only the word benefits, but when you read the description, it describes the benefits payable to employees because of a restructure. Which accounting standard comes into your mind? Very good. Excellent, guys. IS 19 comes into your mind. Do you remember the scope of IS 19? IS 19 used to deal with 4 types of benefits: short-term benefits, long-term benefits, termination benefits, post-employment benefits. At the time of restructure, what type of benefits you are most likely to encounter? Are you going to encounter short-term benefits, long-term benefits, termination benefits, or post-employment benefits? What comes into your mind? So somebody says, sir, it can be post-employment benefit. Yes. There can be a case of curtailment. Remember, there can be a case of curtailment and settlement, which could be examined, moving forward. Or there can be, there can be termination benefits as well. Do you guys remember termination benefits? Termination benefit is a benefit which is paid to the employee upon the unsuccessful completion of the job. You see, termination benefits are payable to employees whenever there is not a normal end to the employment. It's an abnormal end to the employment, and restructuring and bringing on redundancies can be one of the factors of of an unsuccessful end of employment. Make sense? So first things first, 2 things that I see you would have imagined while you were studying this kind of a question in your exam is that first, there will be an implication of IS 37, and second, there will be an implication of IS 19. All right. Then you see that this information could be used to answer the question requirements within the chosen response options provided. Now, while you are into your examination question, you would be provided with two exhibit options. There will be exhibit number 1. And then if you move forward within the question, there will be exhibit number 2. I always suggest to students that do not open the exhibit until and unless you have seen the requirement. The best option is you first read the introduction area of the question, so to get used to the question yourself. Now you already know that there are two implications into this question, IAS 37 and IAS 19. Both of both of the accounting standards have already been revised in your mind. And now what you do? You go to the requirement tab and see the first few requirements. At least see the first part. Do not read the complete requirements as of yet. If you see the whole requirement structure, you can see there are many requirements given in front of you. So overall, this is a 25 mark question. And under the 25 mark question, there are two parts, part A and B. We will not read part B right now. Our main scope should be part number A. Why? Because part number A relates to exhibit number 1. Now, I know that I have to open exhibit number 1 first into this question. You see, while you are studying from me, what's more important for you guys is to understand the process of attempting the question. It's not at the end of the day, you are not here just to see the question itself. You could have read the examiner's answer and you would have understood what was there to be answered. That's not required. When you're coming to the class, your more important objective is to learn the process, how to attempt the examination attempt. Make sense? So if I were you, I would read that part number A is related to exhibit number 1. And in part number A, there are 4 requirements, sub-requirements. And then there will be 2 professional marks as well. All right. So the first requirement, I would read the first few requirements. I can read the first 4 parts as well, because all of that relates to exhibit number 1. Reading all of the requirements of exhibit number 1 will give me a point of view what I need to look at while I'm reading exhibit number 1. So it gives you a good head start. It gives you a good heads up while reading the exhibit itself. So for the first 3 marks, examiner asks you to explain, in accordance with IAS 37 provision, contingent liabilities and contingent assets, why Anchali company has met the definition of a restructure. So the first requirement for 3 marks. So for the first requirement for 3 marks is not a complex requirement overall. It's not an accounting requirement, so to say. There are no number crunchings in requirement number 1 for 3 marks. Your examiner is only asking you to read the exhibit and explain why do you feel that whatever is happening in exhibit number 1 is a form of a restructure of the entity. So it's a generic requirement. You need to put that into the context of IAS 37, and I'll let you know how to do that. But still, it's a generic requirement. You don't need to create a fuss about it. You just need to assess why is this a restructuring activity. Now, whatever happens in exhibit number 1 can only be termed as a restructuring activity if there is a change in scope or form, if there is a change in scope or form of the business being conducted. If it's just a minor change, for example, if you're removing 2 employees from the business, then it's not restructuring. If you're just saying that we are going to open a subsidiary in London now, for example, you're in Pakistan and you say you are going to open a subsidiary in London. Now that's not restructuring. That's just opening a new subsidiary. Make sense? Or for example, if you're saying we are creating a metrics organization in our system, that's not restructuring. So a restructuring is an activity whenever there is a modification in the scope of the business or the manner in which the business is being conducted. It needs to be a material change in order to be termed as a restructuring activity. Now, why am I emphasizing on the restructuring word itself? Because if it's not restructuring, then IAS 37 will not allow you to create a restructuring provision in the first place. Make sense? Then for the next 5 marks, examiner is asking you discuss how and when a constructive obligation for the restructuring cost was created. Your answer should explain why constructive obligation was not created on the other dates as outlined in exhibit number 1. So examiner here is focusing on how and when a constructive obligation for restructuring costs was created. An examiner wants your emphasis on the dates that have been mentioned in exhibit number 1. So these are the crux of the requirement that you gather while you read the requirement very slowly. Now, most of the students, what they would be doing when they are in their examination is they would be rushing out and reading the requirements like a normal student, what he or she would do. Discuss how and when you consider 5 marks. If you read the requirement like that, believe you me, you can never solve this question. You can never solve this question. It's impossible. So the correct manner is that you should read the requirement very slow so that you can understand the question itself. Now you have pointed out what is the main crux of requirement number 2. You need to focus on the dates while reading exhibit number 1. Then let's say I read exhibit, requirement number 3 as well. It says explain how the restructuring cost should be measured. How the restructuring cost should be measured. That means what should be included in the restructuring provision and therefore what should not be included in the restructuring provision. And recognized in the financial statements for the year ended 31st December 2018, your answer should explain the implications for goodwill relating to the acquisition of Stencil Company. So there is the acquisition of Stencil Company in this question, and you need to define what will be the implications on goodwill. This is for another 5 marks. Okay, all right, we need to see that. Then the last requirement is discuss why it is important that Anchali company should communicate the restructure to investors and the points that they should communicate. Now, I would like to emphasize on this requirement itself. You know what this particular requirement of 5 marks actually pertains to? This pertains to investors' focus. Guys, if you are going to attempt a paper like SBR, it is of utmost importance that you understand that what is investors' focus. Whatever accounting standards that you apply will always have an impact on financial statements and hence the investors. Now, examiner wants you to understand that whatever accounting standards you apply, let it be IAS 37 or IAS 19 for that sake, you are not just applying that particular accounting standard just to save your job. That's not your domain. Your ultimate domain is that you're answerable to your shareholders. So you need to have that investor's perspective in your mind, and you need to define this answer as well. I'll let you know how to answer this part as well. Don't worry about it. All right. Now, once you have read the exhibit number 1 very briefly, now you can come and read exhibit number 1 with me. And I would need your support that you listen to me very carefully, because you're not going to do this past paper after my lecture again. So you just need to listen to me for the very first time. We are doing practice of examination right now, right here. There is no requirement. There is no need to repeat it, in your homes. All right. So examiner says, Anchali company has 3 trading activities: restaurants, hotels, and leisure clubs. They have 3 business activities. Anchali company, operates a diversified business portfolio. They are into the hospitality sector. They have restaurants, hotels, and leisure clubs. Anchali company has decided to restructure and conduct its business through 3 separate companies. So what is happening? Can you understand what's happening? You see, right now, Anchali company is one entity which has 3 business segments. They have restaurants, they have hotels, they have leisure clubs. And now what they are trying to do is they are trying to structure their group in a manner that Anchali company does not operate these business segments by themselves. They are rather thinking of creating 3 new subsidiaries. There will be subsidiary number 1, subsidiary number 2, subsidiary number 3, and each of the subsidiaries will look after each of the business segments: restaurants, hotels, and leisure clubs. Now, guys, I would like to ask you a question. Do you see a change in the form in which business is being conducted? Do you see a change in the form, the structure, how the business is being conducted? Previously, you had Anchali company as one entity, and there were managers who would, manage all three types of businesses. All right. And now they are thinking to create three separate companies. Is there a major change in the structure of the business, how the business is being conducted? Now there will be three separate legal entities who will be managing these three type of business segments. And obviously there might be, separate management personnel of S1, separate management personnel of S2, separate management personnel of S3. Do you see any material change happening here? Give me a yes or a no. Do you see a change in the form the business is being conducted? Is this a drastic shift or not? Give me a yes or a no. Because remember, in requirement number 1, part number A, we need to conclude if it's a restructure or not. Your answer to me will provide us the opportunity to answer requirement number 1, part number A, requirement number 1. So let me know, do you see a change in the form the business is being conducted? Is this a change in the form the business is being conducted? Managing through one single entity and managing through three subsidiaries. Is this a change? Give me a yes or a no. It's not a maybe, it's a major change. You see, first you were managing all three businesses yourself, and now there are three different subsidiaries with three different key management personnel, with three legal structures. You are doing your business. So it definitely it's a change. Make sense? Now, what if there is any student who feels, sir, why are we spending enough time understanding this and concluding that? You will know while you are writing an answer. It's very important for you to understand what's happening into the question. It's a major change. Then it says, you see, you need to read further. You see, they say 2 new companies will be formed for the hotel and leisure club operations. They will be opening 2 new companies, registering 2 new companies. S2 and S3 will be new companies formed. They will go to the company's registrar and create 2 separate new legal entities wherever they, in whichever country they are, they will open 2 new separate companies. That is what they are saying. And then they say, and what about the third? And a third stencil company, which was acquired on 20th October 20x8. You need to understand what's happening. You see, they decided that we will be conducting our business through 3 separate legal entities. For S2 and S3, there will be 2 new legal structures being made. But for the restaurants business, S1, subsidiary number 1, they are saying we have recently acquired a subsidiary whose name is Stencil Company. And this stencil company will take over the restaurants business. You see, all the restaurants business will be done under the umbrella of a new company which we have bought, and the name of that company is Stencil Company. Now, Stencil Company may be a competitor, maybe a company which was already operating some restaurants. So what we will be doing is, we have acquired another company which is Stencil Company. Stencil Company might already have some restaurants of their own. Now, what we are doing is, we are keeping their restaurants and adding our restaurants business into their umbrella as well. And we have acquired this company on 20th October 20x8. Do you guys understand? Acquisition of Stencil Company may be one of the reasons why they want to restructure. Previously, they would be handling all 3 types of business under one umbrella. But then they acquired their competitor, which was only operating restaurants. So what they decided to do is, they decided to carve out their restaurants business and put it under the umbrella of Stencil Company and operate all restaurants under Stencil Company itself. Do you understand what's happening? Give me a yes or a no if you understand what's happening. And one more very important thing which has pointed out to us is the date. So what's happened is that on 20th October X8, we have acquired Stencil Company. It's a very important date to remember. All right. It says that Stencil Company will itself be restructured and will take over the restaurant business, as I just explained to you. Examiner says the board of Anchali Company approved the restructuring plan on 20th October X8 after it had discussed and received approval for the plan from employee representatives. So what happened is, on 20th October X8 itself, remember this is the date an acquisition was also made. On this date, the board has approved a restructuring plan. And how did they approve the restructuring plan? Based on the discussions they had with the employee representatives. For example, there might be an employee union, labor union, and they would have dealt with the labor union representatives, the leader of the labor union, let's say, and preliminary talks may have happened. And based on that, the board has approved the restructuring plan. The board has approved the restructuring plan. I'll ask you a question and I want an answer from everyone and I want it quick. The board has approved the restructuring plan on 20th October X8 itself. Can a restructuring provision be recognized on this date? Because the board has approved the plan. Can a restructuring provision be recognized? Why do you say so? Basam, why? And you're saying no, why? Can a restructuring provision be made in accounts? The board has approved the plan. The board has approved the plan. Can we create a restructuring provision? Very good. Sir, you initially discussed, you revised, you asked us to revise the accounting standard itself. The accounting standard IS 37 required two conditions to be met. There must be a detailed formal approved plan and it must have been communicated to those who are to be affected by that plan. Do you understand? Now, somebody would argue that sir, on 20th October 20x8, the board of directors approved the plan. And sir, it was also communicated to those who are to be affected by that plan because there was a meeting which had already been done with the employee representatives. So one or two, for example, leader of the labor union had already been conveyed about the restructuring plan. Sir, this means that a restructuring provision can be recognized. The answer is no. You know why? Because according to IS 37, a restructuring provision can only be recognized when a valid expectation has been created for people who are to be affected by that plan. Now you have only negotiated or you have only discussed it with the leader of the labor union, let's say. Has it been communicated to those who are to be affected by that plan? Maybe not. You have just discussed this with the leadership of the labor union. Has it been communicated to everyone who has been affected by that plan? Tell me, guys. Has it been communicated to those who are to be affected by that plan? Do you think the entire condition of IS 37 is met? And you would say no. So remember, one of our requirement asked us to specify when the condition was met and when the condition was not met. I think that on 20th October X8, at least one of the conditions were met, but the second condition was not met because it was not communicated to those who are to be affected by that plan. Not only the leaders will be affected by that plan, the other employees would also be affected by that plan, and it is yet to be communicated to them as well. Make sense? So I don't think a provision can be recognized on 20th October X8. Examiner says the restructuring involved material changes to the business. So there was a significant change to in the manner business is being done. There is a significant change in the manner in which business is being done. Would you call it a restructuring? Yes, I would definitely call it a restructuring. Make sense? So there is a change in form because 3 separate subsidiaries would be made. There is a change in the manner in which business is being conducted, which has already been mentioned by the examiner. Do you call it a restructuring? I call it a restructuring, definitely. Make sense? Examiner says on 1st November X8. Remember, this is another date which is coming into our picture. 1st November X8. Another date. It says on 1st November X8, the formal plan and the termination benefits were discussed in a meeting of the affected employees. Discussion with the employees. Do you think the criteria for recognizing a provision is met on 1st November X8 itself? Give me a yes or a no. I want an answer from everyone. Those who don't answer won't pass. So let me know. Do you think the conditions under IS 37 have been met on 1st November X8? Yes. The examiner in its requirement asks us to specify when the requirement was met and when the requirement was not met. So we see that the requirement was met on 1st November X8 because the plan, the approved formal plan, was discussed with those who are to be affected by that plan in a large meeting. So everybody has been communicated, including the termination benefits. And if including the termination benefits, the meeting was held, then there is a valid expectation for stakeholders which had been created. And if a valid expectation for affected employees would have been created, now the company has a constructive obligation upon itself to provide for those benefits whenever the restructuring actually happens. So a restructuring provision should be recognized. Examiner says that on 3rd November 20x8, which is technically 2 days after, 3rd November 20x8, it says on 3rd November 20x8, Anchali company issued a press release which summarized the plans and the fact that a number of restaurants were going to close, resulting in the loss of employment. And this attracted a huge publicity. For on 3rd November X8, a press release was made. Now, I would ask you guys a question and I want an answer from everyone. Now, once you have read that what happened on 3rd November X8, remember on 3rd November X8, a press release, a public statement was issued, which, attracted huge publicity as well. Do you still think the condition was met on 1st November X8? Or if the condition of IS 37 was rather met on 3rd November X8? Which one do you prefer? First or third? I'm asking you a question. Some people have answered. The conditions itself were met on 1st November. Remember, it is very important for you guys to understand that IS 37 has no requirement of a public statement. The requirements, the conditions of IS 37 are not that there must be a detailed formal plan and a public statement. The requirement is that there must be a detailed formal plan, and even if that information is not disclosed to the public at large, there must be, there must be a communication with those who are to be affected by that plan. And the communication to affected employees was already done on 1st November X8 itself. The 3rd November X8 press release is a topping on 1st November X8 itself. Now the company has issued a public statement which solidifies the fact that the restructuring is going to happen. Now the company cannot withdraw from its restructuring plan because they have made a public statement, and it attracted huge publicity as well. So this happening on 3rd November X8 only solidifies the condition, but the criteria to recognize a restructuring provision was only met on 1st November X8. Make sense? Now you need to mention this fact in your answer as well. You need to mention this fact in your answer as well. Because remember, in part number A, I guess it was requirement number 2, your examiner asked you to identify, discuss with regards to the date when the condition was met and when the condition was not met. You will mention that on 3rd November 20x8, the press release augments the restructuring decision. But however, IS 37 does not require a press release. Even if a press release did not happen, a restructuring provisions condition was already met on 1st November exit. This is how you answer a question with completeness. With completeness. You need to mention all the dates. You cannot skip 3rd November exit just because you have already said that 1st November exit restructuring condition was met. You also need to say that 3rd November is irrelevant. You need to mention it very specifically. The examiner will not award you mark if you stay quiet. You see, examiner will not get a revelation from God that student knew that 3rd November is not relevant. He will only know that if you write it. Make sense? So it says on 10th December 20x8, binding contracts to purchase new head offices for the hotel and leisure companies were signed. So whatever happened on 10th November has nothing to do with restructuring itself. Whatever decision you took on 1st November, this creates a contractual obligation later on because you follow that restructuring plan. First it is a constructive obligation, and that constructive obligation converts into a contractual obligation because you take actions to implement that restructuring plan. This has nothing to do with the restructuring provision. Make sense? All right, let's move forward. Examiner says, Anchali company started to implement the plan in late December by reorganizing stencil company and closing some restaurants. So they have already started to apply the restructuring plan even before the accounting year end. Accounting year ends on 31st December 20x8, mind you. Examiner says at 31st December 20x8, the restructuring was expected to be completed by March 20x9 with no significant change to the plan. So there is definitely restructuring going to happen. Examiner says Anchali company intends to recognize a provision for costs associated with restructuring in the financial statements for the year ended 31st December 20x8. Anchali company has already decided to create a restructuring provision. Are they on the right track? Yes or no? Give me a yes or no. They intend to create a restructuring provision within the financial statements of 31st December x8, and they are rightly doing so because the restructuring will ultimately end post year end. So there will be cost incurring even after the year end. But since a constructive obligation has already been formed by the year end, you should create a provision for it, right or wrong. It's a potential cost that will come into the future by March 20x9. But since a constructive obligation is there through the announcement to those who are to be affected by that plan, you can recognize restructuring provision within the financial statements of this year. Make sense? All right. Examiner says restructuring provision will include such cost as retraining employees, relocating continuing staff, and future operating losses. So while they create a restructuring provision, while they do P&L debit and restructuring provision credit, they tend to include within the restructuring provision at least 3 types of cost. It will include other cost as well, but it will specifically include retraining cost. It will include relocation cost according to Anchali company. And it will also include future operating losses. Obviously, you will be closing down some of the restaurants, and that will bring you future operating losses while you're closing down the business. When you're scaling down your business, you won't be able to recover, all of the fixed costs that you have to operate a restaurant. So they are going to make a provision for future operating losses as well. My first question. Can retraining and relocation cost become part of restructuring provision? Yes or no? can they recognize a restructuring provision for retraining and relocation cost? No, no, no. Specific prohibition by IS 37. You see, retraining cost will be incurred on those employees who stay with the company. So it's an ongoing business cost. It's an ongoing business cost. It's not a restructuring cost. It's an ongoing business cost. Relocation cost is an ongoing business cost. It's not a restructuring cost. It's not a directly attributable cost. All right. So it can never become part of restructuring provision. So what about, sir, future operating losses? What about future operating losses? You cannot recognize a provision for future operating losses, even if it's not a restructuring. IS 37 prohibits the recognition of a provision against future operating losses in all circumstances. You cannot create a provision for future operating losses in all circumstances. Sir, why? You see, a future operating loss is not an obligation upon you. It's not an obligation upon you. Remember IS 37. IS 37 used to say a provision can be recognized when three conditions have been met. There must be a present obligation, either legal or constructive. And there is a probable chance of outflow, and there is a reliable estimate. Now, for future operating losses, there is no by law condition that a company should make a loss. Have you read any law during your lifetime up till now that requires an entity to make a loss? Have you read any law in your sane mind that requires entities to make a loss? It is mandatory upon an entity to incur a future operating loss or to incur an operating loss. Is there a legal requirement to incur a loss? Or is there a constructive requirement to incur a loss? No. The entities are never obliged. They are never mandated to incur a loss. They can always close down their business and do not make a loss. Let's say I have started a business. I have started a business and I know for sure that first few years I will be making a loss. But I'm not obliged to make a loss. I can decide to stop my business and close down my business and not to incur the loss. I'm not obliged to incur a loss. Make sense? So IS 37 says a provision against future operating losses can never be recognized. It does not matter. It does not matter if it's a restructuring or a not restructuring. Future operating losses provision can never be recognized. All right. So Anchali company is incorrect with regards to recognizing these type of cost included in their restructuring provision. This cannot happen. This cannot happen. We need to mention this within our answer as well. The Anchali Group also plans to recognize a restructuring provision for the cost of restructuring Stencil Company in the consolidated financial statements as at the acquisition date. Now, this point is very important and I want your attention. Anchali Company is saying that, you see, we have acquired Stencil Company. Do you guys remember when we acquired Stencil Company? We acquired Stencil Company at what date? Do you guys remember? Very good. We acquired this company on 20th October X8. And Anchali company is saying we will recognize a restructuring provision as at the acquisition date. We will recognize a restructuring provision for the purpose of making consolidation. We will recognize a restructuring provision as at the acquisition date of Stencil Company, because that is the date the board of directors approved the plan for restructuring as well. Is Anchali Company correct in its understanding that a restructuring provision can be recognized at the acquisition date of Stencil Company? That is on 20th October 2008. Are they correct in their understanding? I don't want an answer from few people. I want an answer from everyone. The answer is wrong. No, they cannot recognize a restructuring provision as at acquisition date. They intend to recognize a provision as at acquisition date, but they cannot. They cannot. Why? Dear, why? Because the criteria for recognizing a restructuring provision was only met post acquisition. Remember, the criteria for recognizing a restructuring provision was only met post acquisition on 1st November. So can they treat this restructuring provision as a pre-acquisition activity? Can they treat this as a pre-acquisition activity? The answer is no. The answer is no. Acha, can anybody tell me what would be the consequence? What would be the consequence if Anchali company recognizes a restructuring provision at the acquisition date? What would be the consequence? I mean, by far, this is a post-acquisition activity. This should be recognized post-acquisition. But had they recognized as at the acquisition date, what would be the consequence? I just want you to have an understanding of this. What would be the consequence? Can anybody tell me? You see, if you recognize the restructuring provision, if you recognize the restructuring provision on 20th October X8, which is acquisition date, this restructuring provision will become part of fair value of net assets of S company. Do you guys remember how goodwill is calculated? And don't tell me you don't know anything about how goodwill is calculated. The formula for calculating goodwill, you know by your previous studies as well. The formula for calculating goodwill is you take the consideration, remember, you take the consideration and then subtract fair value of net assets of S company as at the acquisition date. And then you can get goodwill. You take fair value of net assets of S company. And when I say net asset means assets minus liabilities. Now, if Anchali company was to recognize a liability as at the acquisition date, your liabilities will increase. And if your liabilities would increase, logically your net assets would fall. And if your net assets would fall, logically your goodwill will increase. Do you understand that? So if a restructuring provision was to be recognized at the acquisition date, then this would be treated as a pre-acquisition transaction. And if this is a pre-acquisition transaction, it will ultimately affect goodwill. Remember your past studies as well. This will be treated as a fair value adjustment. This will be treated as a fair value adjustment, and hence your goodwill would be affected, and that would be wrong. This is a post-acquisition activity because the criteria was not met on 20th October X8. This was a post-acquisition activity. The criteria was met on 1st November X8, and therefore this should be treated under retained earnings or P&L. Post-acquisition period, not goodwill. Do you guys understand? Let me know, everyone. Do you guys understand the implication of recognizing a restructuring provision at the acquisition date? Do you understand? Everybody. I want an answer from everybody, please. Good. Now, before even reading this last paragraph of exhibit number 1, I want your clear attention, guys. I want your clear attention. Let me go back to the requirement and I want your feedback. I want your feedback with regards to the fact. The first requirement. Do you remember the first requirement? The first requirement was, using exhibit number 1, explain in accordance with IS 37 why Anchali company has met the definition of a restructure, 3 marks. Can we answer this part? The examiner is asking you, why do you think this is a restructuring? Can we answer this part now based on the explanation that I've provided you and the discussions that we have had up till now? Can we achieve these 3 marks? Most definitely. I've even written an answer for you guys. I've even written an answer for you guys, and I'll be providing you this answer myself. Now, remember, this answer is written by myself. Why do I write up an answer for you guys? So that you can easily understand the language in which you would most likely be answering. Often, people say that the language used by examiner is very tough, and we won't be able to replicate that stuff in our answer scripts. Nobody is asking you to replicate the exact form which your examiner is using. You are a normal human being. You are a normal human being. You are not your examiner. You are just a student. You are not your examiner. And nobody expects you to write like an examiner. Everybody expects you to write like a good student. And as a good student, I've given you a benchmark of how could you write. So, the requirement number one's answer would be, for example, let's say I'll just read two lines for you guys. According to IS 37, remember, we always used to start our answer with according to. Refer to the standard. According to IS 37, restructuring is an activity planned and controlled by the entity which changes the scope or manner in which business is being conducted. And then I try to explain why this is a restructuring activity, right? You can read this answer in your spare time after this class, but I've written it for you. Make sense? Now, you guys agreed that we can answer like this. We can, some of you guys might also think we can write better than you, sir. And that would be a pleasure for me if you can write better than me. Most definitely you can. I have no doubts about that. Make sense? Again, I want your feedback, and I want your quick feedback, guys. Requirement number 2, discuss how and when a constructive obligation for the restructuring was created. It was created on 1st November X8 and not on 20th October X8 and not on 3rd November X8. Discuss how and when a constructive obligation for the restructuring cost was created. Your answer should explain why the constructive obligation was not created on the other dates explained, outlined in exhibit number 1. Can we write answer for these 5 marks? Yes or a no? I want a feedback from everyone. Those who don't answer, I certainly think you guys are not good enough. Or you don't understand what I've been speaking about all this time. Yes, you guys can do it, yeah. Again, I've written an answer for you guys in my own language, in my own form. So it's easier for you to understand the answers. I'll be providing you this answer, obviously. But I think that my wordings, my language is much, 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 much easier for you to understand. And you would be writing a similar sort of stuff because we have studied the same thing in our class. You see, this whole thing we have studied in our class. Yeah, in our lectures. You would be writing the similar kind of an answer. Then, with regards to requirement number 3, explain how the restructuring cost should be measured. Can you guys answer how the restructuring cost should be measured and recognized in the financial statements? What should be included, what should not be included? What should be included and what should not be included? Can you write about how restructuring provision should be measured? Can you include relocation cost? Can you include retraining cost? Can you include future operating losses? Can you write about it? And now somebody just said, sir, this is a very long answer. Oh, hell no. Do you think this is a long answer? My dear, the fonts are big. The fonts are big. If you write it on the CV practice platform, these would highly, consume, half a page. The fonts are so large. You think this is a long answer? I'm challenging you. Most likely, if you write an answer yourself, you would be writing a much more lengthier answer. I've tried to curtail down the answer just to make sure that you get a benchmark, that you do not need to write, lengthy theories that consume all your time of your exam. No, I've written a very concentrated answer. Okay. So can you discuss how the restructuring cost should be measured and what should be made part of restructuring provision? Yes or no? And can you explain the implications for goodwill relating to the acquisition of stencil company and what Anchali company was proposing? What would happen to goodwill if we applied what Anchali company was saying? Can you guys do this? Yes or no? Based on the learnings that you have done up till now, based on the skill that you have had while studying for SBR with me, do you think you can answer this kind of a question? Be honest about it. I think yes. I think whatever we studied up till now, this is a pretty normal question. It's just the approach that matters. Most of the times I've seen that students do not struggle with the knowledge. They struggle with the attitude. They struggle with the anxiety. They struggle with the fear. You struggle with the fear. You need to conquer your fear. The exam is not difficult if you are confident. The exam is difficult if you are afraid of losing marks, if you're afraid of having failure. Now, whenever I used to give my examination, I never used to think about what would happen if I fail. You see, the motivation for me is what would happen if I pass. I would always think, what would happen if I pass? Everyone would say, oh, ho, Yasir Saab, you have just passed SBR. Wow, wow, wow. I just think about the positives. And that gave me the motivation and the kick to work even harder because I really wanted to see that success. Now, there are some students who only see the failure. Sir, what would happen if we fail? What would happen if we fail? What would happen if we fail? I mean, what would happen if you pass? What would happen if you become an affiliate? What would happen if you become an ACCA member? What would happen if you have a successful career? What would happen if you become a CFO? What would happen if you have a good career? What would happen if you go abroad? What would happen if, if everything goes fine? You need to think about the positive sometimes. Do not think negative, 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 negative. It doesn't make sense. Uh-huh. So I think certainly 3 requirements up till now, which were of 13 marks, you can easily answer. Every student can easily answer. And now what I would like to move on to the, specific requirement of SBR, which is, for you guys, it may be a new thing, but it's very much relevant to SBR nowadays. Discuss why it is important that Anchali company should communicate the restructure to investors and the key points that they should communicate. So it's investors focus. In the long term, operating costs will be significantly cut with the aim of improving operating efficiency as part of restructuring. The company is concerned about communicating the uncertain future impact of the decision to restructure to investors. First of all, I would like to ask you a question and use your common sense. Is restructuring a major activity or I should say a material activity in the business? Let me know if restructuring is a material activity that is happening within the business. And while using your common sense, should we communicate this restructuring to investors? I mean, use your common sense. You don't need to be a doctor in this just to understand the fact whether this information should be communicated to investors, yes or no. Yes. Now it's all about what kind of things you communicate to your investors. You see, whenever you are communicating to your investors, you communicate with clarity and you communicate what are the potential benefits of doing restructuring and what are the potential risks involved in restructuring. Make sense? You see, for example, consider yourself as a CFO and you are running a business and you have to inform your AGM. As you know, most of you guys already said, it's common sense to communicate this to your investors. It's a material change in the form and the manner in which being is conducted. You should inform to investors. What should you be informing? If you just give a disclosure that, hello guys, my name is Anchali company and we are doing restructuring. And as a result of that restructuring, employments would be affected. Do you think this kind of a disclosure is enough? I mean, no. I mean, just by informing that we are doing restructuring, it doesn't help your investor. Your investor would start thinking if this restructuring is necessary, if this restructuring would make the business more profitable in future, or is this restructuring an alarm for something very bad, which something which is something worst, which is expected to happen in the future. Your examiner needs answers to the question, and that is what you should communicate. Because you see, on 3rd November 2008, you have already made a press release. You've already made a press release. So your and that also attracted huge publicity. So your investors already know that a restructuring is going to take place. When you provide your financial statements, or you make press releases or public statements or earnings calls. What are earning calls? CFOs and CEOs nowadays attend stock market invitations, and they provide information to potential investors about how the business is going. You should be communicating to investors what are the potential benefits of doing restructuring and what are the potential risks of doing restructuring. For example, your investors would want to know if this restructuring will significantly cut the fixed cost. You see, you are firing your employees, right? And if you fire your employees, your fixed cost would come down. And if your fixed cost would come down, certainly your operating cost comes down. All of you guys know, if your operating gearing, the level of fixed cost that you have is low, you have more operating efficiency. Haven't you read about that in your costing papers? A business which has low fixed cost has more operating leverage. Why? Because even if the demand comes down, it can sustain without making a loss because it has low fixed cost. Now, your investor would want to know about this operating efficiency that management is expecting out of this restructuring. These are the potential benefits. And there can be some potential risks as well. You need to identify those as well. It says that by law, Anchali company must provide copies of restructuring related documents to investors and include investors' feedback in the final documents. There is a legal obligation upon you as well to provide for investor communication. The finance team is struggling to produce a reliable forecast of business performance for inclusion in the investor documentation. You see, some of the restaurants are going to be closed. There will be separate legal entities, and your finance team is saying that we don't have enough strategic clarity that what our future forecast would be. Do you think this is a risk which should be clearly communicated to your shareholders? Or as an accountant, you should say, I won't tell anyone about this. Oh, yes. As an accountant, you should be transparent enough with your investors. If your finance team cannot predict what will be our future cash flows for the next 5 years, let's say, from the restaurant business or the leisure business or the hotels business, how do you expect your investors to make their daily investing decisions? Investors buy or sell a share based on future expectation of future earnings of the company. If the finance team cannot make this expectation because of any goddamn reason, because of changing economic circumstances or because of changing strategic strategic locations or strategic concepts or everything, this information should be communicated clearly to your investors so they can make clear decisions. If they want to fire the board of Anchali company, they can do that, but you need to communicate. This is the potential risk that you should communicate. Make sense? Now, in the requirement, examiner asks you discussed why it is important that Anchali company should communicate the restructuring to investors and what can be the key points that they should communicate. You already know the key points that they should communicate. Yeah. Your examiner wrote a very good answer with regards to this requirement, and I've just replicated his solution in my answer. This is suggested solution by ACCA and not by me. I would really want you to read this. I would really want you to read this. whatever we discussed up till now, mentioned the potential risk and potential opportunities through this, all of what we discussed is written in this answer. But I want you to read this answer by your examiner. And now you can say that, sir, examiner has written a very big answer. Why examiner has written a very big answer? Because he expects such a lengthy answer from you for 5 marks. The answer is no. You can see the marking scheme. The examiner is not requiring you to answer each and every part of how like your examiner has written is. No. If 5 marks required 5 points for you to mention, examiner has given 8 points here. Why? Because examiner is trying to provide you a suggested solution so that you can learn from this. Examiner has given you more points, because somebody would be writing point number A and somebody would be writing point number B and somebody would be writing point number C. So examiner has tried to accommodate all of the possible points in his suggested solution, so that every student can link their answer with this suggested solution. But don't feel that this kind of a lengthy answer is expected from you. No, this is a 5 mark requirement, not a 50 mark requirement. I want you to read this answer and then write your own answer. But when you write your own answer, don't do this. Don't do this. I would also like to write a very lengthy answer like my examiner. You are not examiner. Nobody expects you to be an examiner. Even if you write 60% of this answer, it's enough for you to score 100 marks. Nobody is asking you to score 102 marks. That is practically impossible. So sometimes, this is also why I always try to give my own answers. Why? Because students often get confused while reading the examiner's answer. Although examiner writes in his statements that this is just a suggested solution, this is not expected by a student, but still, students in our part of the world, they feel, oh no, I can never write an answer just like that. Nobody is expecting you to write an answer like that. There have been thousands and thousands and thousands of students who have passed before you. There are more than 200,000 members of ACCA in this whole world, and many more affiliates in this world. Do you think any one person or any one student could write an answer which could replicate the answer written by an examiner? The answer is no. Even if a student scores 100 marks in SBR, his or her answer cannot even replicate, cannot even replicate the answer of examiner. Your examiner is your examiner. You are a student. Write like a student. The expectation is of a student. Nobody expects you to replicate what each and every IFRS says. Just make use of this suggested solution to write your own answer. You need to be smart enough. You are on a professional level. This is a strategic professional exam. Make sense? He has too much spare time. He has too much spare time to write a very good answer. Can you guys imagine how many people would be, vetting this suggested solution? There might be 3-4 people, one who would write the answer, one would recheck the answer, the other person would still recheck the answer, the third person would still recheck the answer, and then it is published on ACCA's platform. That is the quality check that happens, but you don't have that liberty. When you go into your exam, you cannot say to the other party who's sitting beside you, can you check my answer and correct it? And then that person says to the other party, can you check his answer? I just checked it now. This is not going to happen. You just have 3 hours to answer 4 damn questions. Your examiner has more than 30 or 60 days to write the question and write the answer. Do you think you guys can ever be equal? The answer is no. The expectation is not for you to be equal. You are not your examiner. You are just a student. You need to be best of the students. You can never be best of your examiner. Make sense? Done. Once this has been done, I'll move to the last requirement of this question. It says that using exhibit number 2 and in accordance with IFRS, explain with calculations how the benefits should be accounted for in the financial statements for the year ended 31st December 2008. Exhibit number 2 relates to benefits, and I want your answer. And guys, if you don't answer me, this class is over. I want your answer. All right. Benefits. Exhibit number 2. It says that Anchali company plans to close several restaurants in the period to 31st March X9. They expect to close down many restaurants as part of their restructuring activity. The restaurants will slowly reduce their activities by stopping to offer inside dining and instead only offering takeaway services. You see, they will gradually close the restaurants. They will not close restaurants just like, okay, turn off the switch, this restaurant is over. Because that could negatively affect the goodwill of the company. You see, for example, there is a fast food chain where you were used to be going, right? One day you take a coffee from there, the other day you go there, there is no building. And you'd say, hey, am I at the wrong place? You would not feel good about the company who's operating that restaurant if you don't find the restaurant the other day. So how the companies do it, they curtail down the operations gradually. So first they are saying that we will close down the in-dining services, but we will still keep the takeaway services running for the restaurants so that there is some part of goodwill, being maintained. And then we can communicate to our customers that, see, we are relocating our branch or something like that. So you see, the waiters and the staff that were needed for the dine-in services would be laid off, but still you will need some employees to operate your takeaway services. Make sense? Tell me, does it make sense? Part of the employees would be laid off immediately, and part of the employees you will still need for some period of time till your takeaway services continue. Make sense? Examiner says, Anchali company will therefore need some employees to remain in employment until the closure of restaurants in March 20X9. So some people will stay and some people will immediately go. But by the end of March 20X9, everybody who is affected by that plan will go. Eventually, everybody will go. They are saying each employee who leaves before closure will receive a $5,000 payment. So each employee who is being made redundant now, will receive a $5,000 payment. Make sense? Those who stay until the closure of the restaurant. So basically the decision of closing the restaurant was taken on 1st November, let's say, X8. The restaurant will operate until 31st March X9. So how many months to go? There is 30th November month 1. There is 31st December month 2. Then there is 31st January month 3. Then there is 28th of February, most likely, until unless it's a leap year, month 4 and then month 5. So some employees will stay with the company for another 5 months, right? An examiner says those who stay until the closure of the restaurant will receive a total payment of 11,000 on the termination date. So those who leave right now will get 5,000. Those who leave after 5 months will get 11,000. Right? These payments were finally agreed with the employee representatives on 3rd November X8. These have already been agreed with the employees. Anchali company estimates that 200 employees will leave before closure of the restaurants and 150 employees will stay until 31st March X9. Now, examiner asks you to tell us how, in accordance with IFRS, how this benefits payable to the employees will be treated. First of all, I want you to tell me which accounting standard is applicable on these type of benefits. Which accounting standard is applicable? Very good, guys. IAS 19. And as I just discussed it with you, IAS 19 talked about at least 4 type of benefits that are within the scope of IAS 19. And here, at least you have 2 benefits in question. Do you understand this? 2 benefits in question. Short-term employee benefits and termination benefits. Do you guys agree? There are 2 types of benefits in question. You see, whatever payment whatever payment is being made solely for the part of redundancy, that is termination benefit. And whatever payment is being made as part of, some employees being staying with the company until 31st March X9, those are short-term employee benefits. Make sense? So can anybody help me in calculating termination benefits first? Can you guys help me in calculating termination benefits? What amount was to be received during redundancy? What amount was to be received during redundancy? If anybody can answer this. 5,000. Very good. So $5,000 will be paid to each person who is being made redundant. How many employees are being made redundant? How many employees are being made redundant? Is it 200 employees that are being made redundant? Or 150 employees being made redundant? All of them are being made redundant. Excellent. All of them are being made redundant. Do you guys remember? This is the same example that we did in our IAS 19 lectures. Do you guys remember? Same example. We did as an example in my IAS 19 lectures, and the same was examined in ACCA as well. Ultimately, you see, all 200 and 150 employees will be made redundant, and each will get, $5,000. It is just that the 150 employees who will stay until 31st March X9 will receive a total payment of 11,000. They will receive a total payment of 11,000. As part of that 11,000, guys, as part of that 11,000, 5,000 would be the redundancy amount, because this is the amount everyone would get, irrespective they leave right now or if they leave 5 months after. Everyone will get 5,000. The extra 6,000, 150 employees will get. This is short-term employee benefit, because this is only paid, the extra 6,000 is only paid to those employees who stay with the company and work for the next 5 months. Do you guys agree? Do you guys agree? Make sense? So $5,000 into 350 employees. Can anybody tell me what's the number? 5,000 into 350. Do I need to calculate this on my own? Okay, it is 1,750,000. And only the employees who stay, which are 150 employees, will be provided with $6,000 of payment. And this equals to, if anybody can tell me, I can do the math myself. This should be 900,000. So 150% of $6,000. Make sense? Can anybody tell me why is it very important to segregate these two types of benefits? Why do we need to segregate these two types of benefits? Why is it important? This is important due to the recognition timings. You see, short-term employee benefits will be recognized over 5 months. This 900,000 will be divided by 5 and recognized over a 5-month period, as and when employee provides services, as and when they are paid for their services, will be recognized over 5 months. But you see, termination benefits are recognized earlier off. You see, there are different accounting treatments for short-term employee benefits and termination benefits. Termination benefits are recognized earlier of two things: when the entity has made when the entity has made a firm offer such that it can no longer withdraw. Or the second requirement, IS 37 is met for restructuring. Remember? Termination benefits are supposed to be recognized under IS 19 at earliest of, whereas short-term employee benefits under IS 19 are recognized as and when the employee services have been provided. So these short-term employee benefits of 900,000 will be spread over the period of 5 months. But this 1.75 million provision will be recognized immediately in accordance with IS 19 termination benefits. Do you guys understand why is it important to bifurcate between short-term employee benefits and termination benefits? Do you understand? I want an answer. Do you guys understand? Now I ask you a question. Examiner is asking you for 5 marks. You see, these 5 marks will get you from 95 to 100. Or for some people, they would say, for sir, from 45 to 50, whatever. But see, the examiner is asking you using exhibit number 2 and in accordance with IFRS, explain with calculations how the benefits should be accounted for in the financial statements. Can you explain how the benefits should be accounted for in the financial statements? I've already given you a template answer, by the way. And again, this has been written by me. These are the same numbers which you have just told me. Same numbers. I've just explained the accounting standard first as per my practice. And then I've just talked about how it will be done in this particular case. Can you guys do this on your own? Can you guys do this on your own? Yes. Now I'll be providing you with my answers and this question very well. But it's important for you to understand and gain confidence that whatever knowledge you obtain is really applicable by yourselves as well. I just want you to have that confidence. And seriously, if you're studying and you don't have that confidence, you're not on the right track. You're not on the right track. This kind of a question is a very easy question, I would say. Apart from the 5-mark requirement, which is focused on investors' focus, nothing in this particular question I see is difficult. And what based on the feedback of one of my students, this part was there in the mock examination, and at least the B part was also tested in the real exam as well. So this is the kind of question you get in your exam. This is officially published by ACCA question. Do you think you can do this? Yes, you can do this. You need to have that confidence. It's just a matter of time. You need to have that knowledge first. I always say gain that knowledge first and then worry about the questions. It's often seen that people worry about the questions first before even gaining the knowledge. People worry, sir, will I be able to solve the exam? I still haven't done consolidation. Do you think I can do the exam? No. I mean, if you don't cover the course, how can you do the exam? That's not possible. That doesn't make sense. So it is imperative that you go and study your material that you have been provided. And I am telling you, all of you guys have concluded right now. You will be able to do this exam. I am telling you. I am telling you again and again and again and again, you will do this exam. I promise you, you will do this exam. Yeah, but that can only happen if you're studying good. Just by thinking that, thinking over positive or over negative, this is a practical world. Your exam cannot be done just by thinking. You need to start doing. All right. So I hope you like this overall class. We did a very good past paper of SBR, and that is it.